Okay team, Apex Trades here. We really need to talk about volume, because I don't know how much you guys put into volume in terms of analysis, but it's a really important thing to understand. Because let's take this here. This is the most recent chart, and so whenever I'm analyzing and looking for more macro moves, not so much the more kind of intraday stuff, but mainly on the macro side, you know, you've got to anticipate what's going on. I mean, if you look, this volume spike here, two volume spikes actually, but even if you take the first one, if we go back a little bit, actually, let me just take that off the page. If we move back here, what can you see? You know, we see this volume spike here, right? And it's always bettered against the previous, you know, amount of volume. I mean, before that, volume was relatively low, and you can see we consolidated for quite some time around here. And the volume, if you look, didn't really give any indication of which way it was going to go. In fact, it was consolidating. And so, you know, when you start to see this is the peak, and you always want to just kind of map out. So this would have been, you know, the peak from where that volume was, kind of here. You see that big rejection, but it's a lot more volume than what's probably gone on previously. But then of course we have a bit of a move down, and you know, volume starts to drop, even though we are starting to see a move down from. I'm really thinking logically, it's like there's kind of an acceptance at certain price levels that either the bulls will step away or the bears will step away. And what that means from an order book perspective is, if there's a sentiment, and that could be a sentiment from fundamentals, it could be an acceptance that, you know, we're hitting like some form of a recession or whatever it would be, but there's some sort of an inference that the bulls, let's just say, won't want to step in at this point because for whatever reason it's taken a lot less volume to continue driving that price down. And so that's a significant thing to just think about logically in your head. I mean, if you take this volume here, like I say, we had this spike, and then of course volume starts to drop. You know, it takes less to drive that price down. I mean, this if you look at the spike here, you know, clearly price tried to push up, got rejected, and you can see, you know, with this volume, it was a lot more than the previous volume, and, you know, even higher than this volume spike here. So again, just to reiterate, you know, this point here would have been a really interesting telling sign. Okay, prices tried to push up, got rejected, and the volume spike was, you know, in comparison higher than, you know, the previous, and these are on 4-hour candles as well, so the previous, I don't know, few days, 4 or 5 days. So there's some that just your mind just should say, okay, that's significant, there's a significance in this spike. So, and it's a bearish candle, and so obviously price, you know, continued to move down. Okay, so that makes sense, right? So then we kind of consolidate, like I said before. You know, the average volume you can see on this blue line here is kind of just petering along, but then we start to notice clusters of volume starting to pick up a little bit. You can see here we had some nice volume, but still not higher than this, still not, you know, in comparison higher than this volume here. The first point at which you start to think, okay, bulls are really starting to step in, even before all this, is the fact that you're getting these higher volume spikes here. And so you had a nice volume spike here, which still wasn't as high as this. So for me, I would not be bullish at this stage. What I would want to see is, do we beat this candle in volume? Do we get a higher volume spike than here with bullish sentiment? Now the clue, obviously, is we're getting close with this candle here. And so whether you determine this is a time to get in or not, for me, probably wouldn't be, just simply because, you know, again, it took a lot of volume to push the price down here, but here it took less volume to push the price up. And so, you know, it's like, okay, maybe at this stage the bears are not interested for whatever reason. You know, they're pulling away. The order book is less prominent with bulls than it is with bears. That sounds a very obvious statement, of course, but you've got to think logically about it. And then of course we get this one here, and now, okay, now we can see on this candle that the bulls really have stepped in. And so, you know, bulls are in control. This is the volume spike now that everything has to beat before I start then turning bearish. And so, you know, this is a consolidation, of course, right, when we had that nice push up. But this area here now, based on the fact that we've had a new volume spike, this now becomes, let me just get rid of that, this now becomes the new one to beat, right? And so, okay, let's move on. As we push forward, of course, you remain bullish, right? So you remain bullish until such time, really, the way I would think about this is if we beat with a bearish candle this volume here, right? Because going off this line, you know, volume's gone down, but then, you know, this was a break. I mean, this is another good thing you could have done as well. Actually, you know, you're looking for a break of the trend, and that, you know, realistically, you could argue that actually each time we do this, you know, we're starting to break the trend a little bit. So these could have been clues here, because we've broken that volume trend. We're starting to get spikes up, and theoretically, of course, we are breaking the volume trend here and here and here. So there are ways. I mean, I wouldn't tend to do that myself, because I'm looking for confirmation. I want to look for a clean break of the previous bearish high volume candle. And so, you know, from a trending perspective, we are starting to breach through here. And of course, that would have been a lovely move to have gone in on, because you're starting to see that that bullish momentum starting to kick in. So let me just get rid of that one a second. So like I say, we're on to this point now. We've consolidated, of course. You know, we've had a couple of bearish candles, but again, for me, if you were to wind back the clock to this point and we're seeing this breakdown here, I'm not really interested in shorting just yet, because again, you know, we haven't broken this previous volume. So we know at this level, on this specific candle, up to this point here, it's only now when the bears are stepping in. But if I'm not seeing significant volume past this previous volume here, then something about that tells me that, okay, bears are starting to step in, but they're not in control. They are still not in control, even though we've got a fairly decent spike here. It's not significant enough to break this one. And of course that was true, because again, we had another push up, consolidated, come back down. But again, you know, if you look on our volume, it's not a lot of volume. So that tells you that it's like, think about it like this. Okay, we've had a huge push up to the upside, up here, consolidated. This is what you would call, and this is a really good way to identify the difference between what is more of a pullback versus, you know, a change in direction, let's just say. And so, you know, the volume's low in comparison to here and here. And so that is more like just a relief rather than anything else. And so if you're trading this and you're looking for ways in which you want to, whether you're short and long, and yes, you might want to short the pullback just for a small player. Just be mindful that you don't want to let these things go too crazy, because until you starting to see good volume starting to peak above this, bulls are still in control. You've got to beat this, in my opinion. And of course, we can see it was nothing more than a pullback, and then, you know, we went back up to Moon City. And so again, you know, the volume continues, but again, still shorter than this period. And so it's like it's taken less significance, less volume than what it did here to push this price up. And so you start to think, okay, now we need to start thinking a little bit like we could have some problems, because now volume is still able to push up, but it's taken less volume to do so. And so there's more of an acceptance that we're in a zone or an area now where we should start to see some bears step into the market, because they're not at this level. That, you know, they're kind of like, okay, yeah, we're not interested in shorting right now because it's not, the volume's not high. You can push the price up. Obviously, once that price pushes up, we come to a point where, again, we have this sell-off. Can't remember what that was. That could, you know, in such a short period of time to move that amount is probably some fundamental CPI, or maybe it's FOMC. But again, push down, not significant enough. If anything, again, you know, we're looking here, you know, if you look, that was the, let's say, the trend of where the volume is, you know, this is still a significant move. It's still pushed above and broke above that trend line. So if you take where that candle is here, right? And so you could look at that and go, okay, nice volume, still not higher here, but it's bullish. And so is the main candle the main volume spike that caused that. It's still in that kind of, broke out of that trend. And so again, using this as a way to think, okay, nice start of a new trend. Of course that happened. And then, you know, again, low volume for the bears comes in, suggests that actually it might not quite be a move to the downside, but just more of a correction. And then we continued on that again. And so, you know, volume is a fantastic tool, even, you know, without any specific analysis. We're going to skip this forward a little second here because I think this is important to kind of get your head into. You know, if you take, so this is our new volume now, right? And now it's like, you know, if you take just kind of analyzing, you know, that is your kind of trend line. I'm looking for that second data point. You know, we've got a bit of a break to the downside, which we start to see a sell-off down here. So you would be thinking, okay, now's interesting because, you know, as we've broken down, we've broken the trend line, but we haven't broken the top of this here. So whilst the bearish move down here is significant, let's just say, it's not defined as a, you know, a complete break of structure. Therefore, now we can start looking at lower targets. The volume is higher for sure. It's kind of like, okay, operate with caution. There's a potential that we can go down, but what you want to see for confirmation is a big red, you know, big red bearish volume spike breaks this here, because then it's yeah, okay, that's a defined break. I'm happy with that. So let me just get that off so we can remove this, and then we're here now, aren't we? So we've got this spike, obviously really strong volume, the biggest spike thus far. Prices continue to break to the upside. We consolidate. Yes, we get a nice kind of red volume candle here, but again, if we just zoom into that, again, like I said before, this candle here for that volume spike, that might have just been some news. A lot of market makers try to, you know, push price down, push price up, just to kind of wash out some of the kind of earlier shorts or longs as a squeeze. And so that can always be the case. But so here's where we are today, right? We've got, this is the large spike here, which was this candle, and now the trend is here, okay? And so what are we looking for? Well, we've seen previously that when we break these trends, like where are we here? Let's see, if we break this trend, that would have been roughly there. You can see we have a break of the downside. Now that trend, let me just try and zoom in a little bit here, broke out on this candle here. What was that at? That was at 20,852. We went down to 19,500, so about a 700 point move from that point. But then of course, you know, we start with another candle to the upside, which is this one. But then the killer, and I think the one in which you would get in on, was this candle here. Now that's still a nice candle to get in on if you're longing, based upon where we actually ended up. You know, we took that move when we broke out of the trend, and when I say broke out, I'm talking about, you know, breached the previous high on that candle, was here. So if we take even the top of that, you know, we've moved from 26,500 to 31. That was the peak, obviously the local top. This is analysis with nothing more than volume. I'm not looking at any other kind of things that I like to look at. I'm just pointing out some clear, obvious analysis on data, specifically dealing with volume, and why volume is important, and why when you see volume that, you know, goes way above the average and breaks peaks and breaks trends, you need to pay some significance to it. You shouldn't just look at it and go, oh, that's a nice volume spike. You need to look at that as a way to say, wow, okay, what does this mean? You know, it's not just the fact that you've had a spike, you've got to figure out what's going on. And so, okay, you know, where are we today? So again, you know, that's the high volume point. And so there's two things you want to kind of keep focused, right? So you've got your trend here, and so, you know, you want to look, the moment we breach or break this, is the volume bearish or bullish? Well, then if we break this with some nice, you know, high volume, whether it's bearish or bullish, you need to look at that as the way to say, okay, well, perhaps this is now an indication that we can see some further downside. Of course, the real thing that would, for me, cement any kind of larger momentum swing is if we break this volume here. If you do break that volume, then that's clear, because each time we've done that, I'm broke a previous high on in terms of volume, as we've seen in the past. Generally, that's the narrative for the trend. That's the way the trend is going to continue, and with you know, 2, 3, 4, 5,000 basis point moves over, you know, a week, 7 days, 3 days, whatever it's been in the past. And so I think if you're not using volume, or you're not analyzing volume and what it means, then start to kind of just incorporate this, because it's a, you know, it's the one thing that can't be kidded. It's the one thing that you can't really fake. when volume comes in, there's a reason behind that, and when previous volume is broken, that's pretty significant. You know, there's a reason why it's broke. If it's bearish or if it's bullish, then you need to take that as a way to think, okay, well then clearly something is going to happen. So what you need to do now is just focus on that, look at your volume, and then, you know, use that as a way, and then obviously add on to that your other analytics and your other ideas, whether it's key levels, whether it's volume zones, whatever it would be, to start thinking about your moves and your setup for a better entry. So that's all this one was today. Just thought I'd give you a quick overview on volume and how I use it. And that being said, I'll see you guys in the next one.